Welcome to Growth Investing Mastery. This video will do a deep dive on the stock IREN. As a reminder, this is not investment advice or recommendations to buy stocks. The purpose of this video is to do a deep dive on a new company in Bitcoin mining and high-performance computing. Our strategy relies on finding promising new growth companies, and we want to be in the most promising growth companies at all times. This channel focuses on strategies that get results. As of our latest portfolio update on August 7th, the channel was up 56% year to date and 284% since the start of 2024. Let's now introduce the company IREN and take a brief overview of the company. The company is 144 employees based out of Sydney, Australia, and they were founded in 2018 with an IPO date in 2021 on the NASDAQ. Two brothers are the founders of the company, Daniel and Will Roberts, and they both have a 6% ownership stake. That's always good to see when the founders have an ownership stake like this and the shareholder interests are aligned. The company operates data centers in Texas and Canada for Bitcoin and high-performance compute based on renewables. And I was looking into why the company is founded out of Australia but operating in Texas and Canada, and there's a lot of advantages for Texas and Canada over Australia. And we'll get into some of those details of what those advantages are coming up. This stock in particular is really interesting for me because it's at the intersection of a lot of different interests for me, including crypto, engineering, and stocks. I'm all the way up to an 18.7% position right now. And I've really been waiting for a company which I thought could outperform crypto itself. I was looking for a company which has more attractive risk reward than IBIT. And IBIT is BlackRock's ETF, and the custodian is Coinbase. So it's pretty much the gold standard for ETFs in crypto. Taking a look at some advantages that IREN has over the competition. In crypto, IREN has the lowest mining cost of any public company at $41K, and the next best is Mara at $62K. IREN currently has 50 exahash, which accounts for 6% of the mining pool. On the engineering side, the company has the lowest energy costs. They have contracted 2,900 megawatts for build, and they're using Texas's ERCOT, which is a big advantage where they can give back to the grid as well. As a stock, IREN has an attractive valuation. They have massively accelerating financials, and they're already GAAP profitable, unlike most of their competitors. And I gave an analogy here for the company. It's like a caterpillar being born into a butterfly. And I think the market's having a lot of challenges both classifying and understanding this company. Are they a Bitcoin miner, a builder of data centers, a high-performance compute stock, or an AI stock? My conclusion after reviewing this company is that they present enormous upside with low electricity costs and the biggest megawattage being built. And I wrote here, IREN is the dark horse to disrupt the industry. Let's take a look at this metamorphosis, which is underway for IREN. The original plan was to get to 50 exahash for Bitcoin mining, and then stop adding Bitcoin mining capacity. This mining supply uses 650 megawatts of energy. And that's a really enormous amount of energy. When I first heard 650 megawatts, it didn't sound that big to me. But then when I put it in the context of what other companies have, it's quite a lot. These miners provide 588 million of annual EBITDA at the run rate, assuming Bitcoin is priced at 95K. Recently, Bitcoin has been between about 115K and 120K, so the run rate's a bit higher currently. The company has mentioned they're setting up 2,400 Blackwells in British Columbia, and that's broken down with 1,300 B200s and 1,100 B300s. I also found out that 50 megawatts of energy supports 20,000 Blackwells. And I had a post on Salsboard where I thought this was much lower, because they were setting up those 2400 Blackwells at a 50 megawatt data center. So I thought that 50 megawatts was supporting the 2400 Blackwells, but they can support a whole lot more. And management confirmed that on the Q1 report. In progress is 2,200 megawatts being constructed and built for high performance compute. That will bring the total megawattage to 2,900 over the coming years. And the plan is to continue running the miners to bootstrap the HPC operation for now. I had originally thought they were turning off the miners to start HPC, but the miners will be run in tandem. The eventual plan is to switch over to HPC, but in the meantime, they can continue to collect those EBITDA dollars from Bitcoin mining. Bitcoin mining for IREN has about 70% margins, while HPC has 97 to 98% margins. And you can see why IREN wants to switch over with those numbers. But something to keep in mind is that the gross margin calculation does not include CapEx, and Blackwells are pretty expensive. And the company will use market demand for determining whether to mine Bitcoin or run HPC. And that'll be dependent on the Bitcoin price, mining difficulty, and what type of contracts they can get for HPC. The company's newer data centers support up to 200 kilowatt racks, and currently Blackwell takes about 120 kilowatts, while the Bitcoin mining machines only take 20 kilowatts. So Blackwells are much more power dense than Bitcoin mining, but Bitcoin mining takes up more physical space. Let's jump into some financials for IREN. Revenue over the last year has gone from 54 million to 57 to 54 to 118 and to 148 million in the latest quarter. And we can see with those first 3 quarters listed there, it was a little bit above 50 million. And then we start to see the ramp as those Bitcoin mining machines came online. The revenue year-over-year growth rate for those same quarters goes from 380% to 68% to 58% to 177% and to 172% in the latest quarter. We see a pretty nice EBITDA pattern with profitability ramping up alongside revenue. It goes from 16 million to 3 million to -5 to 54 and to 75 million in the latest quarter. For net income over that same period, it goes from 9 million to 27 million to -52 million to +19 million and then to 24 million net income in the latest quarter. And that -52 million, it looks like a one-time issue. So I'm not too concerned about that quarter, but it could be worth checking in why it was so low that quarter. Gross margin has a nice trend as well. It goes from 92% to 84 to 86 to 94 and then to a record high of 95% in the latest quarter. The company has cash of 184 million, debt of 324 million, a market cap of 5 billion, and as we mentioned, a gross margin of 95% in the latest quarter. Taking a look at some of the numbers for IREN, they had 24 million of net income, which was up 18% quarter over quarter in Q1. Revenue and EBITDA also came in at record levels. Revenue was 148 million, up 24% quarter over quarter, and adjusted EBITDA went from 62 million to 83 million sequentially. The hardware margins on high-performance compute are 97 to 98%, and it's a 41K all-in cash costs, they call it, to produce a Bitcoin, with the next best in the industry being Mara producing at 62K. That 50 exahash supports 588 million of adjusted EBITDA, assuming a 95K Bitcoin price. And the total Bitcoin network is 850 exahash. So you can again see how much 50 exahash is, where it's about 6% of the mining pool. There was 33% quarter over quarter growth in the AI cloud segment, and the company has 160 million cash on its balance sheet. In the company's July update, they said the AI cloud expanded by adding 2,400 Blackwells. The company now has 810 megawatts total of electricity connected. And in the latest July update, they got 86 million of Bitcoin revenue with 20 million electricity costs, and that produced 66 million total hardware profit, they call it. The average Bitcoin hash rate in June was 41 exahash, and in July it was 45 exahash. And July had an average of 115K per Bitcoin mined. And you might be wondering why July has 45 exahash if we said they already have 50 exahash set up. It's because the machines aren't on all the time, and I think there's some maintenance period as well. Let's now jump into the narrative for IREN. Their Childress facility is in phase 4, delivering 50 megawatts of energy every month for their data centers. And they said procurement, engineering, construction, mining, and AI teams all are continuing to execute. The 50 exahash target has been completed, making about 6% of the global mining supply, with the Bitcoin network being 850 exahash. But they're now pausing that Bitcoin expansion as they see more compelling shareholder value in high-performance compute. Increasing revenue is underpinned by new contracts and customer retention. Horizon 1 is one of the company's newer facilities with 50 megawatts of liquid-cooled racks targeting Q4 2025 delivery, and it supports the 200 kilowatt newer style racks. The company said 1,400 megawatts at Sweetwater 1 is on track for energization in less than a year from now, April 2026. And that seems like a huge amount of megawattage to be coming online in the next 9 months or so. The company is transitioning to U.S. domestic issuer status in July, and that'll make them GAAP compliant. IREN also leads on Bitcoin efficiency. They're at 15 joules per terahash. The company is assisted by energy market intelligence and software-driven optimization, and they said that leads to strong operating leverage. And I'm definitely interested to learn more about these software-driven optimizations. I'm wondering, is that custom software or a SaaS product they're using? As we mentioned, there's a deliberate choice to pause Bitcoin mining and direct funds to HPC expansion. The company will be utilizing cash flows to support the next funding phase of growth, and not adding Bitcoin machines saves 43 million in near-term capex. That saving on capex could improve their net income coming up. The company says they're looking to maximize return on investor capital, and the best opportunity is in the AI vertical. Management said, "We're delivering scale, we're controlling costs." Continuing on with the narrative, IREN has an AI cloud service called IREN Cloud. That IREN Cloud is currently supporting 2,000 NVIDIA Hoppers, the previous generation of their AI server. The Hoppers are installed in British Columbia, and it took 6 to 8 weeks with minimal capex to swap from Bitcoin mining. HPC and Bitcoin miners are living side by side in that facility, and they showed a picture of that in one of their slides. And this seems to be a question that comes up quite a lot around this company, whether they can actually switch those facilities on Bitcoin to HPC. And it seems like what they're saying is it takes some time, but it doesn't cost that much. The company has strong relationships with key ecosystem partners, including NVIDIA for GPUs and networking, Dell, Lenovo, and Supermicro for servers and hardware, Intel for CPUs, and Weka for storage. It's my first time hearing of Weka. It's spelled W-E-K-A, and they're still a private company, so that could be a company to watch for when they go public. IREN says they're already supplying white-labeled compute to leading U.S. AI cloud providers, and that's providing training and inference workloads. One quote from management was, "So our 2.9 gigawatts that we've secured, that we've worked really hard over the last 6 years to secure, it's a big number. We all know it's a really, really big number. But in the context of 100 gigawatts it's still small, so it sets us up for a really interesting few years ahead. They mentioned that customers want to build sites in 9 to 12 months, but greenfield hyperscale sites can take 5 to 7 years to secure transmission access and energization. One of IREN's big advantages is they're owning the land and there's no third party developers. They can move very quickly. One more quote from management. So I guess my message here is that demand is real. It's growing more and more real week by week, and so it's infrastructure constrained. We've got the land, we've got the power, and importantly, we've got the engineering and execution capabilities. Taking a look at more narrative details, the company says the rest of the market is getting stuck on permitting, power, cooling, and speed. But the company still works with tier 1 engineering firms, tier 1 OEMs, and engineering procurement partners where it makes sense. They've also mentioned a number of times that having 7 years of experience in the field is a big advantage for them. Securing an anchor customer at Horizon 1 is a top priority, and that's their newest AI data center. I'm hoping that the company may be able to announce who their partner is on this earnings, but we'll see if that happens, and we'll get to the earnings preview towards the end of this video. Customer interest at Horizon 1 already exceeds the initial 50 megawatt capacity, and they're designing for a 750 megawatt transformation, as they call it. The company is future-proofing its data centers by using 200 kilowatt racks, and traditional data centers struggle with this type of density. The company has enough capacity to support over 700,000 next-generation GPUs on the upcoming 2 gigawatts that's coming online. The Sweetwater facility has the potential to support $70 billion worth in end-user AI infrastructure. And I never really considered how much the cost would be for all those Blackwells, but it's pretty crazy that that Sweetwater facility can support $70 billion worth of hardware. One last quote from management. So most of these customers, if not all, are not interested in 50 megawatts. They're interested in the fact that this site can scale generally around that 200 to 250 megawatt mark over the coming period. I really like that IREN is engaging with these larger customers who aren't even interested in 50 megawatts. They want to secure a ton of electricity and a lot of Blackwells. One more interesting verbal cue on management is I've noticed every time they have a big vision, they start the sentence with so. And so that's a bit of a tell from them, but they do have this huge vision. And a lot of times they kind of reveal their hand of how big they're thinking on some of this narrative. Let's now take a look at an industry comparison between competitors with IREN on electricity and total megawattage. IREN currently has over 800 megawatts, and they're scaling up to 2,900 megawatts in the coming years. One of their competitors, Nabius, has 220 megawatts online, and they have a target to get to 1,000 megawatts in 2026. And I've seen a lot of discussion online that IREN has its facilities contracted and ready to set up, and Nabius has more vague plans on their megawattage. One of the other main competitors in the space is CoreWeave. They currently have 470 megawatts, or a little over half the scale of IREN. But they're planning to scale up as well, and I saw two different figures for how big they're looking to go. One said 2,200 megawatts, and the other said 3,200 megawatts. So you can see here that IREN and CoreWeave are scaling up to roughly the same amount, about 3,000 megawatts, while Nebius, on the other hand, is planning to operate at 1/3 of their scale on 1,000 megawatts. I also think it's important to point out that IREN has the most active megawattage right now. Yet, when we look at the market cap of these companies, something doesn't make sense. IREN has a $5 billion market cap, Nabius has a $17 billion market cap, and CoreWeave has a $47 billion market cap. And I wrote here, does it make sense for CoreWeave to have 10 times the valuation? Both CoreWeave and IREN are planning to scale up to the same size, and IREN has better electricity prices, as we'll look at next. When we do the industry comparison, I really like how IREN shows up here. It has a much smaller market cap, and it seems like it could catch up some of that ground soon. Diving in on the industry comparison a bit more, we learned that IREN has the best electricity prices from its competitors. I was asking Perplexity about the difference in electricity prices for these three companies, and I didn't give any favor to IREN. I asked for the three companies, IREN, Nebius, and CoreWeave, tell me the differences in their electricity prices. And it came back and said IREN has between $37 and $45 per megawatt hour. It mentions they're in Texas and British Columbia. They have industry leading low cost and dynamic hedging. Taking a look at Nebius, they're from $43 to $70 for the megawatt hours. They're based out of Finland and New Jersey, and they claim 20% lower total cost own. CoreWeave is the highest pricing from $35 to $130 per megawatt hours, and it even says it varies here. They're in a lot of different states: Texas, North Dakota, Pennsylvania, New Jersey, and New England. But what it says is they're exposed to real-time grid prices. The AI response gave additional details. It says IREN has the lowest published power costs, and that's due to active spot trading, dynamic hedging, and access to low-cost grid regions in Texas and Canada. The other response said Nebius claims lower costs, especially in Finland, but actual prices are not public. And I thought it was really interesting they used the word claims there. It then adds US pricing likely falls to that $43 to $70 range for large users. And this detail was really interesting. It says CoreWeave faces higher electricity volatility due to aggressive expansion in grid-stressed regions. And so what it sounds like is in these grid-stressed regions, prices can spike. But it also says CoreWeave does not curtail during price spikes due to AI reliability needs. So it sounds like during a spike, CoreWeave's profitability really craters until that spike is over. Here's the conclusion that AI came up with. It says IREN stands out for consistently lower predictable electricity rates. CoreWeave pays higher and has more volatile prices. And it says Nebius leverages international locations for lower TCO, but has no precise public rate for 2025. And my takeaway is that IREN is the clear leader on electricity prices between its biggest competitors, all who have a market cap much bigger than IREN. Let's now do an industry comparison on valuation between IREN and its two biggest competitors. IREN had revenue of $148 million, with EBITDA of $75 million and net income of $24 million. And on revenue of $148 million, an EBITDA number of $75 million is quite strong. It's a nearly 50% EBITDA margin. And then we take a look at Nebius, who has revenue of $105 million and EBITDA of negative $92 million. Surprisingly, they have a net income of $584 million, but when they adjusted net income, it was negative $92 million. And there was a one-time issue in Nebius's quarter where net income spiked up like that. I don't have the exact details, but I did see it was a one-time issue. And the numbers from Nebius are somewhat surprising as they have $105 million of revenue, but they're losing $92 million to get that. So they have extremely negative net income margin. And I think the bull case for Nebius is that they're expanding and spending up on CapEx. Additionally, they've been raising revenue guidance, so it seems like the market's giving them a whole lot of credit for some things they haven't built yet, though. CoreWeave has some unusual numbers as well. They have 1.213 billion in revenue and EBITDA of 608 million, but they have net income of negative 291 million. And usually you don't see such a wide gap between EBITDA and net income. They kind of go lockstep with EBITDA being higher. I didn't look at the exact issue, but I'm guessing it's probably amortization on that EBITDA calculation that makes it so much more higher. And that could mean they're writing down the value of their Blackwell servers over time. A lot of times when I'm screening for companies which are already profitable, I'd like to see both EBITDA and net income be positive. The reason for that is the management team can move around numbers any given quarter to make a EBITDA or net income number look good. But it's impossible to move around both numbers to make them both look good if they aren't. And one thing to keep in mind here is Nebius and CoreWeave got their Blackwells set up earlier, and that is a competitive advantage, but that advantage is closing pretty fast. And I pointed out here, IREN, while much smaller, is GAAP profitable on EBITDA and net income. And I know there's a counterpoint there that IREN is doing Bitcoin mining and those others aren't, so it makes sense they would have this extra source of income. But again, it's just really smart by IREN to bootstrap their whole high performance compute operation through Bitcoin. And again, keeping in mind the market cap for these companies, IREN is 5 billion, Nebius 17 billion, and CoreWeave is 47 billion. I also really like this comparison on employee count and how IREN looks here. IREN has just 144 employees. Nebius has 1,371 employees, and CoreWeave has 881 employees. And with that low headcount for IREN, it means they're going to be way more profitable. It's way less salaries to pay. I'm still kind of surprised by this 144 number. It seems like IREN is working really effectively with small teams and groups. Let's now get into some bear cases I've seen for IREN. And the first one falls under the question, no contracts? And I wrote here, it's a good idea to steelman bear cases against your company. And by steelman, we mean assume the bear case is true, and then try and knock down that bear thesis. I was talking with someone on Twitter who said, what contracts does IREN have? And my rebuttal to that would be, currently there's a lot more demand than supply for these types of services. And IREN has been saying 50 megawatts is not enough for some larger customers. Those customers are looking to sign for 200 to 250 megawatts right away. And another bear case I'd heard was, will the market trust a Bitcoin miner to set up high performance compute? My take there is it should be an easy pitch for them having low electricity costs and renewables. They also have a lot of operational experience with the electricity and the Bitcoin miners and then swapping those out for HPC. They're offering a service where there's a whole lot of demand for it. And my conclusion was it doesn't make sense to me that Nebius and CoreWeave have all this demand, but IREN won't be able to sign any contracts. One final conclusion is IREN can offer competitive prices if they have to. When we looked at the electricity costs, we saw IREN has the best unit economics. Another bear case for IREN could be a reliance on BITMAIN, their main supplier of Bitcoin miners. And BITMAIN's been around forever, and their miners are called ant miners. They're based out of China, and this latest round of miners that IREN bought from them was shipped right before tariffs landed. And that's a huge advantage for them, that they didn't have to pay the tariffs on that latest round of miners. Meanwhile, their competitors will have to pay tariffs if they want to get the latest model of Bitcoin miners. I wrote here, it's good timing to have decided to pause purchasing, but the company wants to switch to high performance computing anyways. And I left one open-ended question here. Could they restart purchases easily in the future? So if a new ant miner comes out or there's new miners which are more efficient, how easy will it be to acquire those machines? Overall, I don't think this is that strong of a bear case, as IREN is moving towards NVIDIA being their main supplier now. And in terms of compliance, NVIDIA is a way more legitimate supplier than BITMAIN. And the stock just switched to GAAP reporting and NASDAQ, and now it's relying on NVIDIA. So I think the marketplace may view this as a more serious company now that's meeting all the regulations. But there is a possibility that the trade war could place uncertainty around this segment of the supply chain, although that would affect all their competitors as well. The tariffs probably do benefit the miners in China, though, because they don't need to pay the tariff to purchase there. One more thing about BITMAIN was they were accused of running their machines extensively before shipping them to customers. But there's also a counterpoint there that that was never proven, so it's hard to say one way or another, but there is a little bit of controversy there. Another bear case I've seen for IREN is that the Bitcoin is halvening in 2 years. And that's actually the correct term they use, halvening, where the block reward gets cut in half. And with the next halvening happening in 2 years, one Twitter user said IREN's profitability will be cut in half. And the counterpoint there is that we do not know the future Bitcoin price or the mining difficulty. So it's impossible to make assumptions about that 2 years into the future. Additionally, halvenings have historically boosted the price 6 to 12 months after occurring. It does mean less supply hits the market, but demand often stays the same. And I wrote here, Satoshi thought of everything. So the economics of the system automatically adjust to miner difficulty and Bitcoin halvening. There's also mining rewards all the way to the year 2140, and then transaction fees power the network after that. And even if the price of Bitcoin comes down or the difficulty goes way up, IREN has the best unit economics, and they would be the last man standing. The last man standing is a concept borrowed from game theory. And let's take a look at this hypothetical scenario. Bitcoin crashes to 50K. And keeping in mind, it takes the Bitcoin difficulty 2 weeks to adjust. And I wrote here, everyone else will have to turn off their miners first, because Mara produces a Bitcoin for 62K. So they'd be losing 12K for every Bitcoin mined. And for other miners, it costs a lot more. And some miners may be okay to run at a loss just to keep the cash flows going because they may have other debts or other plans for that money. And in this scenario, IREN is the last man standing who can mine at a profit. And it would cost IREN 41K to produce a Bitcoin, so they'd be making 9K per Bitcoin in that case. The other thing I like about IREN is they hold no Bitcoin on their balance sheet, while many other Bitcoin miners do hold Bitcoin on their balance sheet. And from my point of view as an investor, that Bitcoin serves as a liability if they don't custody the coins correctly. Additionally, the value of that company is clearly tied to Bitcoin, and it will just trade as a proxy for Bitcoin, like the way that MicroStrategy does. So I was really looking for a company which is operationally superior, and I believe that's what IREN is. And I wrote, other miners will be left holding the bag, as they say, after the value of their assets drop over 50%. So a lot of the other miners may have priced in a 100K plus Bitcoin price, and they're betting a lot on that outcome. The reason they're betting a lot on that outcome is because they have so much crypto and Bitcoin on their balance sheet. But IREN has no crypto assets to lose value on, and they sell their coins back to the market immediately. Additionally, if the Bitcoin price crashed this hard this fast, a lot of miners would just be wiped out, and they would turn their machines off. In this case, the difficulty would go way down, and IREN's Bitcoin miners would have more relative value. In this scenario, IREN would increase their 6% market share of mining quite a lot. Let's now talk about one concern I have for IREN, which was previous debt and dilution. If we look at the share count for the company's IPO in 2021 till 2025, it looks like this. It goes from 20 million shares to 55 to 68 to 188 to 224 million shares outstanding. And if you saw this for a SaaS style business, it would be a huge red flag. But a lot of hardware companies that are scaling up scale up through debt and dilution. And I actually think IREN's done a pretty decent job managing this. But it was a little surprising to see a share count growing like this. Additionally, the company has 324 million in debt. And in Q1, they said, we estimate a net funding requirement of 250 million over the remainder of 2025. It sounds like management is planning to finance future expansions through their Bitcoin mining operation. But I did write, I'm actually okay with one more round of debt or dilution to reach full scale. It's possible they're able to sign a large hyperscaler or two and then want to expand even further. I would prefer to see them scaling through mining profits if possible, but if the opportunity is big enough, I'm okay if they want to do more dilution. Let's take a look at an earnings preview for IREN. The company's earning date is Thursday, August 28th, and they're reporting from the calendar year April 1st to June 30th. And this is a bit of an interesting earnings report because IREN has given us Bitcoin mining and high performance compute figures for the entire 3 months already. And from my understanding, we're basically able to compute what revenue is already off of these numbers. The interesting thing, though, is that analysts still give estimates for where they think IREN will land. And the estimates I saw in Koifin were revenue of 188 million, which would be up 226% year over year and 27% quarter over quarter. Adjusted EBITDA is projected to land at 111 million, and GAAP EPS is projected to land at 11 cents. But as I mentioned, the company's already given us numbers for the 3 months they're reporting for. And the April, May, and June Bitcoin revenues were 50.1 million, 64.7 million, and 65.5 million, for a total of 180.2 million in Bitcoin revenue over those 3 months. So we can see there the month of April had much less revenue than May and June, and they hadn't brought on all their miners yet, and the Bitcoin price was lower. For the months of April, May, and June in high performance compute, the revenue was 2 million, 2.2, and then 2.2 again, for a total of 6.4 million in those 3 months. And when we sum all those numbers together, we see the total is 186.7 million in total revenue. And the interesting thing here is that the revenue we know about is going to land lower than the analyst estimates. And there is a possibility for some clickbait articles that say IREN missed their numbers versus analysts' estimates. Something to keep in mind is this revenue amount is not related to any customer spend, megawattage, or their timeline. And it will be interesting to see what the market focuses on for this earnings report. Will they focus on strong year-over-year comps, seeing that revenue is up over 200% year-over-year? Or will they look at actuals versus analyst estimates and think that the company missed some arbitrary target? Or could the narrative carry the day for IREN after this report? And I wrote as a question, is it possible they can announce a marquee customer soon? And I'm hoping that's what they'll do on this earnings report. The last point here goes back to our metamorphosis analogy. Will the market see a broken caterpillar or the birth of a butterfly? Let's now look at our conclusions for the stock IREN. IREN is a misunderstood stock going through a metamorphosis. The company is underestimated by the market and competitors. Yet they have the best electricity costs and they're doing a huge megawattage build out, and that equals a big opportunity. The company's well-run mining operation shows the focus on profitability. Meanwhile, their competition has no idea when they will reach GAAP profitability. And the company appears to be undervalued at a $5 billion market cap. The company's reporting earnings on August 28th, and they have easy comparisons on the next two earnings reports. But are the analysts' estimates too aggressive? We already know the revenue number that IREN should report, so it will be interesting to see what the market reacts on in this report. My final conclusions are the company seems to be doing everything right, and smart decisions have led to an AI data center powerhouse being born. And that concludes our video on IREN, so let me know what you think in the comments section. I hope you enjoyed this one. As a final reminder, this is not investment advice or recommendations to buy any stocks. Thank you.